Rohr here with an early global view on Monday, September 1st, 2014. It's currently 7:15 a.m. And yes, it is U.S. Labor Day, but everybody else is open and there's important data out today. So we wanted to update our view, especially even with the S&P close today. The indications from the dollar markets going back to last Friday are important to review on the way into the return from the holiday today in the U.S. Now, looking at what occurred on the short-term view, hourly chart on the left, 30-minute on the right for the U.S. S&P 500 future. We're still looking at September there, and most other contracts until next week. We're looking at a market that actually was up higher, up at 2,350 or so before the opening on Friday, but then got hit with some of that bad pre-opening news like the personal spending number. However, that said, it still feels like a bad news is good news market when it holds this channel, just as it did on Thursday morning under the pressure from the concerns over Ukraine-Russia confrontation once again. This is the overall upward channel from the last sharp, significant reaction low back around 1900 area, going back out to the roughly the 8th of August. And we see it holding again Friday morning, churning sideways, can't break it. And in any event, because of the gap up last week that ultimately led to a lot of sideways churn to no better than roughly the 2002 area, the market only backed off to close off the gap back to the previous Friday's close as a week ago Friday on the 22nd at 1988, pretty much exactly on the opening on Thursday. That, because of other congestion there, etc., now will be the key area, 1990 to 88, even if it breaks down out of this channel, that the S&P future will need to break to show any weakness. What's interesting this week is that the topping line and oscillator resistance on the weekly chart that were about 2010 last week move up to roughly 2015, give or take $1. So there is a good deal of upside potential as long as lower support isn't broken. And that's pretty much it for the short-term view of the S&P 500.